What's up, everybody? I am Jaspreet Singh and welcome to the Minority Mindset. You are a young professional and you want to be smart with your money. This way you can be rich while you're still young. This way you can enjoy your life and be financially stress-free. But how do you do it? Well, you're in the right place because today we're gonna talk about the best ways to use your money when you're young to build your wealth. So hit that thumbs up button and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new videos every single week. And now let's get into it. You can think of building wealth kind of like rolling a snowball. You start off with a small snowball the size of your fist and you pack it real tight, and then you go on top of a snowy hill and then you start rolling the snowball, and slowly after a little while it's gonna grow to the size of your face, and now you keep pushing it and rolling it and it's growing a little bit faster, and after a little while longer you realize that the snowball grows to about the size of your hips, or to your hips rather, and you're pushing it and it's growing faster and faster because now the snowball is bigger so it can attract snow faster, and you're going and you're going and you're going, and then oh my god, the snowball is about to roll over your house. The earlier you start, the faster you'll be able to build this wealth snowball, which is why the best thing to do in your 20s is to invest very aggressively. This way you can build a machine that's making you money faster and faster each year. Time is so important for your wealth snowball to grow. This way, once you get it really big, it can attract snow or money much faster. Like Warren Buffett, one of the most successful investors of all time. 99% of his wealth was built after his 50th birthday. Before he was 50, he was still super rich, but after 50, he became unbelievably rich. Now that you understand the importance of starting young, the next thing you have to understand is that investing isn't just something you do once and done. I just bought some stocks. Well, I guess I'll check back in 50 years. Being a successful investor means making consistent investments to your investment portfolio every single month, even if your contributions are small. The best thing you can do is create a financial plan for yourself. This way, you don't have to tell yourself how much to invest. Your plan will tell you how much to invest each and every month, and I'll grab my whiteboard so I can show you exactly how to do it. If you are young and you don't have a lot of financial responsibilities, I want you to follow our 50, 30, 20 plan, which says you should be spending a maximum of 50% of your income on yourself. You should be investing a minimum of 30% of your money, and you should be saving a minimum of 20% of your money. So for every dollar you make, you can spend 50 cents, you can invest 30 cents, and you should be saving 20 cents. If you have more financial responsibilities, like you have people relying on you financially, it's gonna be a lot harder for you to live off of just 50% of what you make, which is why you should follow our 75-15-10 plan, which says you can spend a maximum of 75% of every dollar you make. You should be investing a minimum of 15% of every dollar you make, and you should be saving a minimum of 10% of every dollar you make. Now, I know what you're probably thinking, but Jaspreet, why are we investing more than we're saving? I mean, my math teacher told me that saving is the key to building wealth. Well, sorry, Billy, your math teacher is wrong. Saving is losing. Investing is the real key to building wealth, which is why we're gonna be investing more than we save. And not just that, after you save 6 months worth of expenses, so after you've put aside 6 months worth of expenses in your savings account, you will not save another penny because saving is losing, and after that, you will double down on investing and then take this saving money and invest it. And if you don't believe me when I say saving is losing, I already made a video where I explain exactly why, and I'll link it in the description below for you to watch after this video. So now that you've made the decision of how much money you should be investing each and every month, now it is time for you to make a decision. How hard do you want to work? There are 2 ways to invest your money. You have the active way and you have the passive way. The active way is when you invest in yourself. If you have a business idea, you can be your own investor by taking your money and investing in your idea, or you can buy an existing business through a franchise or buy an online business. Essentially, you are investing this money to create more income, but you are actively working to grow your money through this business creation model. Passive investing, on the other hand, is where you send your money to work and then you walk away and you let your money do its thing, and that's it. At first glance, the answer might be obvious. Why would I want to do an active investment if I could just be a passive investor? Well, the returns are very different. If you are a passive investor, the returns tend to be a lot smaller than if you were an active investor. Like if you invested $1,000 in the stock market, after 1 year, you can expect to earn an average $70 to $100 after a whole year of doing nothing except just sending your money to work. But if you took that $1,000 and you use it to start your own business, you could turn that $1,000 into $10,000 after 1 year. If you are young and want to live big, well then this is your time to go the active route and take more risk and put in that time. And of course, this upside does come with sacrifice too. I mean, it takes a ton of time and work to build a business. It can be stressful and there's risk involved, so it's not for everyone. But if you can build your own profitable business and you can start this on the side or in addition to your work, well now you will have more money to fuel your passive investments. And if you're young and don't have kids and you're not married, it's a lot easier to do this because you have less people relying on you. Whether you decide to go this active route or not, you have to do this passive investing, and there are a number of ways to do this sort of passive investing. Whoa, a beard oil company just went public. Let me invest in that. I'm a very simple investor. I don't like to invest my money and then have to wait 10, 20, 30, 40 years to see a return on my money. I want to start seeing my returns a lot sooner, which is why I invest for passive income. In the stock market, that means investing in companies that pay dividends. Dividends are regular cash payments that companies pay you just for owning them. Like, I used to own a lot of shares of the McDonald's company, and every 3 months, McDonald's would deposit money into my account, and I never had to sell a single burger. You don't need a ton of money to do this. I mean, you can start investing with a couple $100 and start getting those dividends. No, you're not gonna become a millionaire off of your dividends from a $200 investment. It's just gonna be a few bucks. But some passive income is better than no passive income, and everybody has to start their wealth snowball from somewhere. Now, my favorite way to invest for passive income is to invest in income producing real estate, which are things like homes or apartment complexes that I buy not to live in myself, but I'm buying them to rent out to other people who have to pay me rent every single month for living in my property. The thing that a lot of people get confused about real estate is they think, oh, I don't really want to do this whole real estate investing thing because I don't want to have to clean toilets and deal with tenants and do all of that. Well, now my real estate investments are completely passive. What you can do is after you buy some real estate that you want to buy as an investment, you can just hand over the keys to a property management company who don't necessarily want any money up front. They'll just take a percentage of your rent that you get, and then they'll handle all the work. Would you be surprised if I told you that I already have a lot of videos on real estate investing? Yes? Well, then my friend, you are easily surprised because I have made some videos on this and I'll link them in the description below for you to watch after this video. But don't forget about the financial system we created in the first place. If you're making an extra $1,000 a month from your passive investments, well, you want to send this $1,000 down this financial system again. This way, you'll be spending some of it, you'll be investing a piece of it, and you'll be saving a portion of it until you save 6 months worth of expenses. This way, you can live a little bit better, you'll be investing some more so you can make even more passive income, and you'll get to your savings goals much quicker. The key to making smart financial decisions is 1, understanding what to do, and 2, knowing what's happening in the finance and business world. This way you can make smart money decisions, and that's why we created the free Minority Mindset newsletter, where we break down the most relevant finance and business news stories, and then we show you how this news affects your wallet. This way you can be money smart. This newsletter is completely free, and you can subscribe to it by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed the video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every Monday, Wednesday, and Friday at 7:30 a.m. Eastern Standard Time. So hit the subscribe button and the notification bell below. That way you actually find out when our new videos are released. And as always, keep hustling.